In this video, I want to talk a little bit about the unusual VA home loan qualification rule after a business bankruptcy. In other words, if you've owned a business and the business failed and you had to file bankruptcy and you're trying to buy a house after the bankruptcy, there is a very specific VA guideline that actually allows you to buy the house early. In other words, the waiting periods can get reduced. And I found out about this recently because I had someone that watched my other bankruptcy videos and we had a whole discussion about it. And I actually ended up looking at the guidelines and found out some very specific rules. And I'm going to go through those rules. So make sure to stick around to the end of this video so that way you'll know the rules as well. The other thing that's interesting to note here is this actually also applies to FHA. So if you're not a veteran, or maybe you know someone that's not a veteran that also needs to know this information, anybody can get it. Either VA or FHA, this rule could apply. And so the advantage of what we're going to talk about today is there is a reduced waiting period if the business the business failure caused the bankruptcy. Now, at the very end of this video, I'm going to show some very specific rules you have to keep in mind to make this work. Now, this is what's called an extenuating circumstance. VA and FHA have extenuating circumstance rules, which would actually create reduced waiting periods, and that's what we're going to go through today. Now, just to keep in mind, there are lender overlays. A lender overlay is a rule over and above what the VA requires, and so not all lenders would let you do that. Sometimes the lender will say, you know what, yeah, we know that there's a VA rule saying this, but we have our own rules over and above what the VA requires. And also, you get working with an expert, higher than 10% essential for this type of thing. You can't be working with the newbies and rookies for this type of thing because this is a very complex type of thing, and not everybody knows how to do them. Working with a mortgage broker, I mean, I always recommend working with a mortgage broker anyway, but it's essential for doing this type of transaction because expert guidance completely needed. Now, before I explain the reduced waiting periods, you have to understand what the waiting periods are normally so you know what they get reduced to, right? So let's define the waiting period first. And the waiting period would be from the bankruptcy date to the close date. Now, I did not say application date because the application date is not the close date. It would be the date that you actually close on that house purchase. Now, you can apply and go under contract before the closing date. You just have to push the closing date back to after that waiting period has expired. Now, as far as the different types of bankruptcy, the date that the waiting periods start depends on the type of bankruptcy, and again, if there's extenuating circumstance. And so our Chapter 13 is pretty simple. It is based on the filing date, and you have to make those 12 on-time payments or 1 year. And you don't have to be out of the bankruptcy. You can actually still be in that bankruptcy on Chapter 13. And whether you're self-employed or not, there's no difference on anything. The extenuating circumstance rule doesn't really apply to the Chapter 13. So again, 12 on-time payments, you're good to go. Now, Chapter 7, here's where it gets interesting. That is based on the discharge date of the bankruptcy. In other words, the bankruptcy is discharged, you have to wait that waiting period. And it is normally 2 years from the discharge date till you can, again, close on the new house. You can, again, apply, but closing on the new house has to be at least 2 years after the bankruptcy has discharged. Now, here's where it gets interesting. And here's what I want to talk about, the self-employment rule. If the bankruptcy was caused by the self-employment, in other words, because you had the business and the business failed, it can get reduced to 1 year instead of 2. And this is all outlined in Chapter 4 of the VA handbook, along with most other credit guidelines, if you're following along the handbook. Now, there are certain requirements that need to be met. And so let's flip the screen to that section of the handbook, because that's really the best way to do it is just read it directly out of the handbook, read the VA's exact wording, and then we go from there. So let's go into the handbook. Here we go. Following 4 credit conditions must exist. 1, the borrower obtain a permanent position after the business failed. Now, if you go on disability or something, I think they're okay there. What they're really looking for is they don't want the circumstance that caused the bankruptcy to happen again. In other words, they don't like serial entrepreneurship. They don't like you closing the business and restarting it, like that type of thing. Like I had one that the guy, had a farm of some sort, and the crops all got destroyed one year. He filed bankruptcy. And then I asked him, I said, what are you doing now? Oh, I'm restarting my business. No, you can't do that. You have to basically have gotten a new position, or maybe if you're on Social Security or something like that, that's fine too. Second one, and this is key, there's not any, and I do mean any, derogatory credit information prior to when you became self-employed. And we will pull records and tax returns and LLC filings, all that stuff, to figure out the date that your self-employment began. And if there's anything, and I mean anything, on that credit report prior to starting that self-employment, all deals are off. You're back at the 2-year waiting period. No ifs, ands, or buts, no exceptions. And here's why that exists. It's because they're granting you an exception, right? And basically what they want to see is, you know what, my life was perfect until I started this business, and then this business fell apart. I had to file bankruptcy, and now my life sucks. But now I'm rebuilding my life. That's kind of the way they're thinking about this. And FHA guidance identical to this. And Section 3, there's not any derogatory credit information subsequent. In other words, after the bankruptcy. And so again, it's, my life was perfect. I ran this business. Things happened. I filed the bankruptcy. My life is on the upswing now. Now I've got a stable job or some other form of stable income. Life is good now. That's what they're looking for. And number 4, which is always good, fail the business were not due to borrower's misconduct. Self-explanatory. Don't do anything crazy or illegal. And those are the following 4 conditions on a bankruptcy. So back to me real quick. So there you go. That is, again, the unusual rules for getting a home loan after a business bankruptcy. So I hope this helps. And maybe if you filed a bankruptcy and it was due to business failure, hopefully that's some wonderful news. Or if you know someone that is in this situation, you maybe know a business owner friend, please share this video with them. Now, as always, if you have any questions about VA home loans or anything in particular, feel free to give me a call. My number is 937-572-3713. I'll be reached at scarpro.com. Talk to you soon. Bye.